8 years. I have been trading for 8 years. And if I'm being completely honest with you, at least 3 of those years were a waste. Not because I was not working hard. I was, but I was working hard in the wrong direction. So in this video, I want to give you the 4 most important things I learned across those 8 years. Not theory, not textbook stuff, the actual lessons that came from losing money, from making mistakes, from figuring things out the hard way. If you are earlier in your trading journey than I am, I hope this saves you some time, because some of this took me way too long to understand. The first lesson is about simplicity. And it is the one I wish someone had told me on day 1. For the first few years, I was genuinely convinced that the more I knew, the better I would trade. I studied everything. I learned concept after concept. I combined strategies. I looked for confluence between 5 different systems at the same time. I thought complexity meant sophistication. It does not. What complexity actually means in trading is more decisions. And more decisions means more ways to talk yourself into a bad trade. More reasons to stay in something you should have exited. More mental noise when you need clarity the most. The traders I have watched succeed over time, including myself once I finally figured this out, are almost always trading something simple. A clear structure, a defined level, 1 or 2 things they are looking for, and that is it. I trade NQ now. I look for liquidity. I wait for the sweep. I enter the fair value gap. 3 things. That is the whole system. It took me years of overcomplicating things to arrive at something that simple. And the results after simplifying were better than anything I produced in the complicated years. If your system has more than 5 rules, that is probably your problem right now. Not the market, not the prop firm. Your system is too complicated to execute consistently under pressure. The second lesson is about risk management. And I want to be honest about what I mean by that, because I think most people hear risk management and think it is about position sizing, formulas, or percentages. It is not. That is part of it, but the real lesson I learned about risk management is simpler and harder than any formula. The real lesson is this: protecting what you have matters more than making more. For years, I was focused entirely on making money. Every session was about getting a result. And when I had a bad day or a bad trade, I would push harder to recover it. Bigger size, more trades, more risk. And that approach right there destroyed my accounts consistently. Not because my entries were wrong, but because on the bad days I multiplied my losses instead of limiting them. The shift that changed everything was accepting that my job on a bad day is not to recover. My job on a bad day is to keep the damage small. Close the platform. Come back tomorrow. A small loss can be recovered. A large loss changes how you trade the next day and the day after that, because now you are trying to dig out of a hole. I have had fund accounts for a long time now. The ones I keep longest are not the ones where I started with the biggest first week. They are the ones where I never had a day that put the account at risk. That is what risk management actually means after 8 years of doing this. The third lesson took me the longest to accept. And it is the one that made the biggest difference once I did. The mental side of trading is harder than the technical side. Full stop. I do not say that to be motivational. I say it because I spent years thinking my problem was technical. I thought if I could just find the right setup, the right entry, the right confirmation, the results would follow. And I kept improving technically while my results stayed inconsistent. Because the problem was never technical. The problem was what happened in my head during the session. The anxiety after a loss, the overconfidence after a good day, the need to be right, the inability to sit in a trade and let it work without touching it, the revenge trading after a bad week. None of that has a technical fix. You cannot chart your way out of it. You cannot find an indicator that stops you from making emotional decisions. What fixes it is awareness and repetition. You have to get honest with yourself about your patterns. You have to notice when your emotional state is driving your decisions instead of your process. And then you have to build rules that override those emotions before they can cause damage. The best traders I know are not the ones who understand markets the best. They are the ones who understand themselves the best. That took me years to really believe. but I believe it completely now. The fourth lesson is about consistency, and it connects everything else I have talked about. Consistency is not a result, it is a process, and it is the only thing that actually compounds over time in trading. Now here is what I mean. A lot of traders think consistency means winning consistently, having green days most of the time, but that is the wrong definition. Consistency in trading means executing your process the same way regardless of what happened yesterday, regardless of whether you are up or down on the week, regardless of how the trade feels in the moment. I have passed a lot of prop firm challenges. I have had a lot of fund accounts, and the difference between the ones that worked out and the ones that did not is almost always the same thing. On the ones that worked, I was consistent. I followed my rules when I did not want to. I walked away when I was supposed to walk away. And I sized the same way on every trade. On the ones that did not work out, I was inconsistent. I broke rules when I thought I had a good reason. I sized up after a good run. I stayed in too long because I thought this time was different. 8 years in, the thing I protect most is not a strategy or a setup, it is my consistency. Because if I'm consistent, everything else takes care of itself over time. If I'm not consistent, no strategy in the world will save me. So those right there are the 4 things. Simplicity over complexity. Protect what you have before you try to grow it. The mental side is the real work. And consistency is the only thing that actually lasts. None of these are exciting. None of them are the kind of thing you want to hear when you are starting out and you want to find the edge that changes everything. But after 8 years of trading, these are the things that are actually true. If I could go back in time and tell myself one thing at the start, it would be this. Stop looking for more to learn and start getting better at the small number of things you already know. The edge is not out there in some strategy you have not discovered yet. The edge is in executing what you already have better than you did yesterday. And that is what 8 years have taught me. If you want help building this kind of process properly, the consistency, risk management, the mental side, I have a mentorship called the Prop Firm Blueprint. It is for traders who are very serious about doing this the right way. The link is in the description if you want to apply. And if you are looking for a prop firm, I strongly recommend Holoprime. They have the fastest payouts in the industry with a 0 payout denial policy. They have CFD, futures, and crypto accounts. You can check them out with the link in the description. I'll see you guys in the next video.